How's it going, fellas? Welcome back to a market recap.
Alright, let's lock the fuck in. Yeah, welcome back to a market recap. I didn't trade today. I was looking for a trade, but I didn't end up taking a trade. Let's just kind of dive right into it and see why we didn't take a trade and how we could have improved and how we could have treated today a little bit differently, right? So on the daily time frame, we were bullish, right? On the 4-hour time frame, we could just kind of on the 4-hour time frame, we were
Bearish.
so I was looking for some shorts here, especially because on the 1-hour time frame, when market opened, we were also bearish, right? So to me, I was looking for shorts here. Something that I didn't. Oh, let's just kind of also get into like what these are, right? So here's our 4-hour equilibrium, right? From this high to this low, right? We were still kind of in between this range here when market opened. I didn't have that drawn out, and we'll kind of get into that a little bit of why I should have and how I could have improved today. But I went in on the 1-hour time frame, and I saw that hey, we have this high here, but we don't have a low. So I scaled down to the 30-minute time frame. We have this high here, we have this low. Perfect. We have our equilibrium. All right, found our 1-hour equilibrium in between this price point here, right? Then we also had this 30-minute for value gap. I had marked that out. And from here, market opened. I was just kind of waiting for a retrace back up into this area, back up into this 1-hour equilibrium here, up into this fair value gap. And then I was going to try to look for some low time frame confirmations to short. Now let's kind of get into how I could have treated this differently, right? So you can see that we had this 30-minute equilibrium and this 30-minute fair value gap here, right? But going back to what I said originally is that I didn't have this 4-hour equilibrium drawn out from this high to this high here, right? I didn't have that drawn out. And why that's important is because you could see market opened, we poked our head up in here, then made this inverse for value gap, and we ended up breaking structure, taking out this liquidity, taking out this liquidity, and coming all the way back down to this liquidity down here. All right. So, looking back on this with 2020 hindsight, I should have, since we were still in this range when the time market opened, I should have had this marked out, right? Instead of just this, right? I mean, if it would be different if, you know, like, say on the 4-hour time frame, we tapped into equilibrium already and then we continued lower. That would give me a bias that, hey, we're trying to go short here, right? And then I would look on the next leg to find that equilibrium and like some 1 hour for value gaps, 30-minute for value gaps, something in between there. But since we're still in this range here, right? I should have had this marked out regardless, but I didn't, right? I only had this marked out and I had this fair value gap marked out. So to me, you know, price didn't want to come up and draw up into this price range until later, and then even then it disrespected it and continued higher. So what I should have done was had this marked out once I saw that, you know, hey, we've already tapped into this discounted price range for shorts here on the 4-hour time frame. Came below it, back into our premium price, and then we come up and poke our head back in again. And then once I saw this inverse to fair value gap break a structure, that should have been my entry. All right, targeting liquidity, liquidity, liquidity. But you know what? You live, you learn. Come back again tomorrow. You know, I stuck to my rules. I stayed disciplined, and you know, I'm not gonna be too sad because you know, I'd rather not take a trade than lose a trade, right? But yeah, I mean that's really all I have. It was just kind of a quick video today. If you guys enjoyed it, drop a thumbs up, and I'll see you guys probably on Wednesday because let's just kind of go over the news for this week. So we had no news today on Monday. Tomorrow we have Powell speaking, so we will definitely not be trading because he's a
Little monkey boy.
Then we also have Powell speaking again on Wednesday. So I lied. We will not be on the chart Wednesday. But on Thursday we have CPI, unemployment claims. But that comes out at 6:30. And the reason I have it at 6:30 is just because it's Mountain Time, and I'd prefer it to, you know, reflect the time that I'm actually going to be trading. So for me, it's just a little bit easier than having on New York and then having to figure out like, oh, and then convert the time zones and stuff like that. So it's just easier for me to have it on Mountain Time and stuff. Like, and even on my chart, I have it on Mountain Time. So we have CPI on Thursday. Depending on the news, and you know, if market goes too far gone, then I won't be trading on Thursday. But I definitely want to try to look for something on Thursday. And then on Friday we have PPI at 6:30, and then consumer sentiment on at 8 a.m. So Friday might be a day I'll probably hop on the charts. I don't know if I'll necessarily take a trade. Like I said, again with CPI, it just kind of depends if you know, once this comes out, if volatility is high and um, there's still some price action and it's not just consolidating in the market, then we might look for something and look for taking a trade. But yeah, I mean that's really all I have for today, fellas. Drop a thumbs up if you liked, and I'll see you again later. Peace.